Okay, today we're going to look at dividend plays. Will be a new video, and I'll be posting some dividend plays every so often, and they'll be in this format. So I want you to understand how the sheet works and what it all means, and then hopefully that'll help you make some dividend plays that you can make some money on. So we're going to start real simple. Date is the date that we enter the trade. Company is obviously the Discovery Financial. Ticker's DFS. I like to put the sector down just so I keep my money spread out over different sectors. This financial. Number of shares typically is going to be 100, but that can be multiples of 100, whatever you prefer. I like to put the 12-month high and then the 12-month low. And then I have a percent off the high and a percent off the low based on the current share price. So in this case, you can see we're about 7.7% off the high, or 75% off the low. That's not uncommon right now because of, we're still showing 12 months ago was when COVID was starting, and so a lot of the stocks hit their low in that first section of COVID and then started back up. I like to take stocks that are not at their highs. I like them to be 5, 6, 7% off the highs personally. I don't like to purchase a stock at an all-time high or 12-month all-time high. This one, the dividend, is going to be 44 cents, and it is coming up on the 17th. The X date is 2/17. Now, 2/16 will be the first trade day. That's when I'll take this trade. The X date, that's when you need to own the stock by the beginning of that day. So technically, you have to not have your stock called away by the end of trade on the 16th, the day before. Just so you know how that works. DTD stands for days to dividend. And in this case, it's 0, meaning that we're taking this on the 16th. That's the last day you can own the stock, you'll get the dividend. So unless the stock is called away the same day we bought the shares, we're going to get the dividend. The current share price is $93.72. The dividend is 44 cents. The option I'm looking at is the 94 call, 19th of February, 21. There will be one contract, is on 100 shares, that's what it would be. The strike, as you can see, is 94. The premium is $1.20. Days to expiration is 3. Now the rest of this is all calculated by the sheet. So you can see that the dividend is going to give me a $44 profit, should I collect that dividend. The premium is going to give me $120. And the stock profit, if it's called away, I'll get $28. Now there are 3 possibilities. This can be exercised after the dividend, it can be exercised before the dividend, and of course it cannot be exercised, meaning if it's not called away for somebody to collect the dividend and then at the close expiration of the option, it's below the 94 strike, then we would get no exercise, and we keep the stock, we keep the premium and the dividend. So this is telling us the money we would keep in each of these 3 scenarios. If it's exercised after the dividend, meaning we kept the dividend, the premium, but then the price got exercised, we'd make $192, which is the sum of those 3 profits. If it's exercised before the dividend, then we only get the premium and the stock profit. In this case, $120 and $28, which is $148. We didn't get the dividend because it was exercised before we would have collected that dividend. In this stock's case, that would mean it'd be exercised by the end of day on the day we took the trade. So those are the 3 possibilities. These are the percent annualized return if either one of those 3 options is the reality. So either 249, 192, or 212% return. Now how that's reached is simply the profit we made. In this case, let's say the 192. Let's say we got exercised after dividends. We made the total possible profit, $192. We divide that into the capital required, then divide that by the days to expiration, and multiply it by 365 days in a year. That gives me an annualized return. Now, I get a lot of people don't like that. That's fine. That's the way I measure my profit. I shoot for 18 to 24% annualized return on my entire account. Now, I try to keep 25 to 30% of my account in cash. So I need to do better on each of my positions than that 18 to 24% annualized so that it makes up for the difference that's never invested. So the dividend percent is 0.47. The premium percent is 1.28. And the stock, if we take the stock profit, is 0.3%. The annualized return for each of those is below 57, 155, 36. These are just numbers that help me analyze a trade and say, is this a good trade? I have a spot here for my final profit. And so, for example, if I would transfer that number there so that I know on that particular trade I made $192. And I could look up here to see what my annualized return was on that. So that's how this works. And when I post these, there'll be a PDF file, and there'll be, in this case, the one going up for tomorrow's open. There's 9 different stocks on there that have dividend plays coming up that I think are worth looking at. Now, these are not stock or option recommendations. They're just possible positions for you to examine. Always check current pricing. Realize this pricing was while the market was closed over the weekend. When the market opens, this pricing could be lower, could be higher. The option price could be lower, could be higher. So you have to analyze it at the time you're actually making the trade. This information is to just give you some stocks to possibly watch that maybe fit your plan. Always have a plan. Know what you're going to do if the stock gets called away. Know what you're going to do if the stock drops, what you can do. You know, are you going to take a loss? Are you going to hold it and continue to sell calls until it comes back? Have a plan in place before you ever take the trade. So many people take a quick trade. Oh, look, I can make this premium. That's a huge percentage. And then they get the stock drop and they look at it, oh my heck, and they start doing their research then going, well, I would have never done it had I looked at that. Look at things before you make the trade. Get up a little before the market. Look at each of these positions. Get hone in on the few that the 1, 2, or 3 or whatever, how many you're going to look at. And then as the market opens, then you go look at, what the price is doing and so forth. Now realize when market opens, option prices can go crazy because of the spread. I typically like to take my trades about 15 to 20 minutes into the open. Try to buy the stock at a price I'm happy with for that day. And then once I've been filled on that order, I go ahead and go take my covered call. So that's how this works. Like I say, this is an interactive sheet I've designed. So, I could go in and let's say, well, you know what? On this one, I'm going to do 200 shares. It immediately updates everything to 2 contracts, updates my actual profits. The percentages aren't going to change because the percentages are the same whether you're doing 1 contract or 10 contracts. But the interactiveness of this Excel sheet allows me to kind of play with. And if I'm looking at this, let's say tomorrow at open, the price has dropped to $92, but the option price the premium is now down to 98 cents. I can then still look at this and see if it was worth with those changes. The dividend's not going to change, so it's just the share price and the option premium that can change. But you will find they kind of stay in a relationship throughout the day. I mean, they're going to vary some, obviously. And if you're one that loves to look at charts and try to time things, you can try to buy the stock on a dip and then wait a little bit and buy the option when it comes back up. Personally, that's not my style, but if that's what you do, then that's what you do. So that's this in a nutshell. I hope that helps you. Watch for these. I'll post them if I'm going to post them for the week, it'll usually be at the very beginning of the week, on Sunday or early Monday morning. And do a little research for yourself and see if anything fits your needs.